So hi guys, here I am by myself. Urs is away traveling. Let's dive right into the numbers. Today we're talking about the Canadian interest rate decision that was made. Also, we're going to talk about the European Central Bank's interest rate decision, and a little bit later on we'll get into the unemployment figures that came out just today in the US economy. So looking at the Bank of Canada, they decided to lower interest rates by 25 basis points. This is an interesting move, kind of a bit expected. Inflation numbers have been headed in the right direction for Canada, getting under 3%, sitting at just above 2.5% overall. They do see the trend, staying pretty consistent. They want to see it keep going down in terms of trying to reboost their economy. The central bank decided they'd like to ease inflationary pressures and have signaled that they want to deliver more rate cuts as the year goes on. We'll see there. They're kind of in an interesting position, obviously getting inflation under control in a better manner than the US market, but showing some weakness in some other sectors and unemployment challenges. It'll be interesting to see if they continue to deliver these interest rate decisions and what inflation does. Will it pick up now that it starts to ease? However, a 25 basis point drop is not huge, but kind of some relief to the markets, especially in the small business sector. So we'll see how things proceed there. Looking at the European Central Bank, followed suit of Canada, dropping their interest rate by 25 basis points. So now it sits at around 4.25% interest rates, depending on which one it is. Here they cut it across the board in the various levels. This is seen as well, similar to Canada, inflation numbers starting to head in the right direction, close to that 2% target that they're looking at. Not quite there yet, so they still face some challenges. However, the European Central Bank is looking at where the euro is in the euro area. Some of these countries, as we have mentioned before in previous episodes, coming out of recession, struggling, trying to get some economic flow moving, with inflation coming back into closer levels to where they want it. They're trying to stimulate their economy just a bit. So we'll see how this plays out. We'll see, again, similar to Canada, will this kick off with higher inflation? I think that it won't see an incredible increase. It's going to take a while for it to see that inflation if it's impacted based on this decision rate. It always takes months for that effect to kind of kick in. But we see here the economy in Europe struggling, in some economies like Germany coming out of recession and wanting to move forward with an environment that's a little bit easier to grow. So they're trying to bring a little bit of breathing room. And it'll be fascinating to look at how the consumer sentiment, that inflation or interest rates are being taken away. So something to keep our eye on as we move forward, certainly. Talking about the unemployment numbers that came out in the US, on one side, non-farm payrolls showed incredible numbers, outpacing the predictions and forecasts. In May, they added 275,000 new jobs, which is a huge jump from the previous reported month of non-farm payrolls. So there's good news. On the other side, the unemployment rate ticked up by 0.1% to 4%, so a little bit higher unemployment there. In reading the information that was given out by the Bureau of Labor and Statistics, they were saying it didn't really move so much. It didn't go up, or I guess unemployed, people who are now unemployed. So still quite a few jobs that were lost. So kind of conflicting there. On one side, you have this great number that blew the mind of expectations in terms of job reports, as well as inflation ticking up slightly. So it'll be interesting to see, especially with next week being the interest rate decision of the Fed. What are these numbers? How much is the central bank looking at it and compared to inflation? On one side, the 4% unemployment is okay. It's not too bad. It's still within a healthy level. On the other side, if the environment is creating jobs, maybe they should pull back the interest rate. We've seen the US dollar weaken quite a bit in the past few days. And so, will this be a sign that investors are thinking, oh, the Fed is going to cut rates? We'll see. I think it's a bit presumptuous, especially because the inflationary environment still remains quite high with about 3.5% inflation in the US. So not even under 3%, not, still a percentage and a half away from what their target is. So loosening could potentially lead to that uptick in inflation, which the Fed really doesn't want. Inflation has been quite sticky in the US here, and they really don't want to really lose that battle, lose that credibility that they've taken in being strong and being hawkish against inflation, especially with unemployment still being relatively low. However, that is certainly a concern. It's an election year, so there's a lot of interest in making the environment look a bit better, uplifting that consumer sentiment report. Again, we're going to see before the ECB meetings, the inflation numbers coming out next week. That's what we're going to be looking at next week, is mostly the United States inflation figures and the Fed interest rate decision, and then we will have the Japan interest rate decision as well. So I'm looking forward to diving in. We're going to see what's kind of happens, where the US dollar heads. That'll be something, if the Fed does cut rates, where will the US dollar strength go? If they don't, we see another resurgence of the US dollar gaining some strength? So it'll be something that we keep our eye on moving forward. Thank you so much. We'll see you next week.